Hello and welcome to the Actuary podcast, produced on behalf of the Institute and Faculty of Actuaries, the IFOA. I'm John Watkins, a financial journalist and, as ever, your podcast host. We're on our 11th episode now, so there are plenty of past episodes you can catch up on. Do check them out on our YouTube channel, where you can also subscribe and enjoy the Actuaries series of informative videos. So in this episode, we're talking to three actuaries: Perry Thomas, the CEO of Flood Re, Georgina Bednam of the Government Actuaries Department, or GAD, and Shivash Bagalu, a partner in the Middle East. First up, we've got Perry Thomas here in the studio with us, and he was recently interviewed in the Actuaries May-June issue. Perry, thank you so much for joining us.
Thank you. It's good to be here. Thank you.
Great stuff. So just start talking a little bit about Flood Re. Marking its 10th anniversary this year. It's a slightly unusual reinsurance organisation because it kind of bridges government policy and insurance industry interests, and it deals directly with the impact of climate change as well. With all of that in the mix, what would you say is the greatest challenge for the business right now?
Well, thank you for saying it's slightly different. It's kind of unique, I think, along with Pool Re. I'd say we had 9 really, really good years, really low levels of flooding, really slow growth, really cost-effective reinsurance. Couple of smaller storms, actually, but big changes in the way people ceded business to us. So we ended up with very rapid growth. Last year, 25% plus. And I'm probably one of the few insurance executives who doesn't want growth. So big growth, but also at a point in the reinsurance cycle was moving against us. So our costs into risk transfer risk increased very materially. But we'd had that golden decade, we'd built up a really good balance sheet, and we're starting to take a lot of risk, or being able to take the risk on ourselves. Mm-hmm. And so for the actuaries out there, we took our solvency margin from just over 1,000% to about 200. So a lot of explaining to do and what we were doing and how we actually took risk and building the capabilities. So an exciting time, but it has had 10 really good years, and it's really met its availability and affordability challenges that was the public policy bit about, or part of the public policy bits and why it was set up.
Yeah, absolutely. And we'll talk a little bit more about that. It's due to be in operation until 2039. So explain that to us a little bit. It's got this mission to change the UK insurance landscape for homeowners at risk of flood as well. So tell us a bit about how it works and what that mission is and how you achieve it.
So it was set up because there was a market failure in that people couldn't get insurance if they were on floodplains or high flood risk. Now, you generally build low socioeconomic group homes on cheaper land, it's cheaper land because it's in a floodplain. So it's very much kind of social policy issue. Mm-hmm. And that had a really big impact on the economy because you're stuck, you can't mortgage your home if you can't get insurance, etc. So that's why it was set up. And it's set up to address that market failure. And that's why it's decided to end. It's got this 25-year point from when it was set up by the 2014 Water Act, hence 2039. Yeah, wasn't totally random.
Not a number, yeah.
But its job is very much to correct that market failure,
right?
And in that causes a load of challenges because actually it has been very successful. It has addressed the affordability issues that it's got. But it's also, when you have something like this that works really well, you also create other market disincentives. There's a disincentive to innovate if you can just put the business to us. So far so good. It was set up with the government and the industry. The idea was the government would build a lot of flood defences, and it spent about £1 billion a year. So 10 billion spent on building flood defences. The industry, I think we would say, was kind of more challenged in actually creating individual homeowner-led kind of resilience to flooding. Mm-hmm. There's a lot that people can do, but we've lost the incentive to do it because you can now get insurance quite easily and cheaply. So the government's done its bit. The interesting bit is the government spent £10 billion, and if we look at kind of all the flood models, you go, well, the same number of properties are exposed now than were exposed, but there might be different ones. And that kind of brings in the kind of climate change pieces, or maybe it's just the modelling. We'll see.
Yeah, we will. You were on the board of the organisation for several years before becoming CEO last year. So what led you to make the step up? And also, having been around the company for some time already, did that give you some immediate goals that you wanted to tackle when you came in?
That kind of like couple of years on the board beforehand, certainly helped in terms of understanding who people are, what it's doing. But going back to that point, we buy our reinsurance every 3 years. So the business comes into it, we reinsure it out globally. So we're very much at the mercy of the global reinsurance markets and that global reinsurance cycle. So when things like Valencia happened, Storm Boris that kind of caused huge amounts of damage, the airport flooded in Dubai, huge floods, billions. I think Valencia was just 5 billion on its own, 3 billion from Boris. You go, well, actually, that really impacts the costs to us in the UK.
Yeah.
And so we got to a point, we buy, I think it's the second biggest single program in Europe. And you suddenly go, ow, big jump up in costs. At the same time, we got a big kind of spike in growth in policies. And I think more of our seeding companies were looking around and going, well, if that can happen over here, what can happen in my book? So they changed their policies. So we had to deal with, we had a big issue to deal with. Being on the board helped to understand how that was working. We saw it coming to some extent. We were preparing a cat bond, which is our first cat bond and the first kind of flood cat bond that was out there. And we ended up having to deliver that, but at a greater scale than we thought. We ended up having to take more risks than we thought we would have to take. And that, when you're taking and managing that level of risk, you've got a load of other capabilities you've got to build. So being on the board really helped. Interestingly, going from that kind of executive life, a non-executive life is very different. You only see part of it. Yeah. And then obviously when you come back in an organization to the executive life again, you go, oh, I thought it worked this way. It doesn't. Right. I thought these people did this. Oh, they do that. Right. So it's been a really interesting, did a really interesting year, actually, in 12 months.
Yeah, good. You're a qualified actuary as well. So how do you think that being an actuary CEO differs from being a non-actuary CEO? And what are the advantages of having an actuary background?
Well, I think the actuaries in my team will tell you it can be really, really annoying. Imagine. I don't think there's any pros and cons. I think whenever you get to at an organization to like a CEO level or CRO level, CF, you're dealing with lots of pieces across the organization. So everybody has a different speciality they bring and a different lens. And the task is to make sure all those kind of lenses are kind of moved. You appreciate all of them. You know, I wouldn't be telling the IT guy how to build the infrastructure of the company and do the cyber defenses. But you've got to have an interest in it because you've got to set the budgets and stuff. So I'm not sure being an actuary, I think my experience gives me loads more advantages than being an actuary and being curious about everything. I think is one of the important pieces.
Yeah, that's fair. You've held a number of senior roles since you qualified in the 90s. But you said in your interview with us in the latest issue of the magazine that you've never had a career plan as such.
No.
So tell us about how you've gone about moving around your various roles, and I guess if you have an MO to get where you want to be.
Yeah, I mean, it's really interesting to kind of look back and kind of justify and say, like, I did this because of this. I actually kind of applied for an actuarial role because I needed a job.
Right.
Yeah, I needed some money after a postgrad. I didn't even realize I was necessarily applying to an insurance company. But they used what I did in my maths degree. There you go, start. Found it really interesting. One of the really good things they did, was they sent all the graduates and the actuaries out in the field. And it was a lifer company. I remember going out and paying some claims with people. And you talk about the widows and orphans, there's 2 kids, young kids, that's tough by bus. And you go, well, I really can't help. But, the emotional side. But you give that check and it's like, you don't have to move. The kids don't have to move. Your house is paid for. It's you understand what you're doing there. One of the things I've introduced in Flood Re is getting everybody qualified to go out. We have a floodmobile that goes out to actual floods.
Right.
It's a bit of a change of policy, but everybody needs to go through the training of that, and everybody needs to go on that bus at some point. Hopefully not too often because we don't want too many floods. But we go to community outreach for exposed pieces because you need to make that connection to the end customer. And they're not our customers because our customers are the insurance companies. But I think unless you can appreciate what's happening at the end of
at the end
chain. Yeah, just how emotionally devastating it is to get flooded.
Yeah.
You're out of your home for 18 months, 2 years sometimes. It's not water. It's, this is why I get geeky on the flooding bit. We're one of those countries with a sewage and drainage system that's combined. So if water comes into your home, it's not water. What you're left with is a biohazard, which is what does so much damage.
Yeah, absolutely. You also said in your interview in our latest issue of the magazine that it's really important to have a team around you that is willing to challenge. In fact, you use the word argue with you.
Yes.
Tell us a bit about how that's influenced your leadership across your career, and if you think that's valuable leadership tip for others.
Yeah, I think it's absolutely essential. I mean, whatever position, whatever seat you're sitting in, you only have one perspective. So you don't have all the data, and however big you think your brain is, other people's a bit bigger. So encouraging that piece where people can come into the office and, I'd say, agree disagreeably.
Mm-hmm.
Raise the points you hadn't thought of, the bits you've missed. You really don't want to do this time because. I think that's great and absolutely essential. I think the Israelis had this idea like the 10th man. If everybody's agreeing, the 10th man or woman is there to disagree, regardless of what they think personally.
Just to challenge.
Yeah, and I wouldn't say, I had a plan to get people like that, but as I've gone through my career, I found those people to be extremely valuable. And they're often not, the person next to you. They're often someone, in my current organization, there's someone 3 or 4 levels down from me. It's like, you're doing this wrong. Oh, I really like what you're doing here. You need to do more of that. Great. Thanks. And getting that kind of feedback, I think is absolutely essential. The next bit of that is you've got to have those people who will dissent, but when the team makes a decision, the team's got to decide and go to it together. There is nothing worse than the corporate saboteur that's like, yeah, I'm on the team, but I'm really playing for the other guys.
Yeah.
Half-hearted. At that point you go, well, the bus is going this way. We've all decided, we've all had our say. If you're not going to go to that destination, get off the bus.
Yeah, absolutely. You've had experience of chairing an IFOA working party and of being on the council, and of being on the council as well. Why is it important to you to get involved in those things?
Each one, I think, would be kind of very different. So a number of the working parties is just curiosity. I'm doing this anyway.
Mm-hmm.
It needs to be set up. We're working on this. So there's other people, I've got a contribution here. They're doing this and I want them to do that. Council, I think, going on because, if you've got views, air the views, don't just sit there and complain. At the point of when you're complaining about something, if you're not doing anything about it, then it's on you.
Yeah.
Shut up. And so when I came onto council, I think there's some challenges. And as someone who's employing a lot of actuaries in different parts of the world, we set up an exam system based, in the 19th, earliest 20th century when people worked for a company for 30 years. So investing in someone for 7 or 8 years training and then not doing any more training, that's okay.
Yeah.
But when people are changing jobs every 3 to 5 years, you can't train and invest in someone for 7 years. It's ridiculous. Yeah. So we've got to kind of move that on. And the idea that when I first started, the actual spreadsheets were just coming in, and they're going to make actuaries absolutely redundant. So they didn't. It's one of the best tools. And I think AI is the same today. It's one of the best tools we'll have. It won't make actuaries redundant, but if actuaries aren't using it, those actuaries won't have jobs. And it was the same with spreadsheets. If you couldn't use a spreadsheet, you soon didn't have a job.
Right.
So this whole piece about shortening the front end of the training to get actuaries in, making it much quicker, how you identify those people, but then having a program where you're continually training them and getting them used to using the new tools and the new skills. That's what I think the profession needs to work towards. It's gone a long way towards it.
Yeah.
Certainly not a lone voice. But unless we can do that, the profession won't last very long.
Yeah. In terms of the profession, you've got dyslexia.
Yep.
You've talked about that. Do you feel the profession is open to, accommodating people's challenges like that and differences? And how would you like to see the profession evolve going forward to accommodate things like that? Has that been tough for you? Have you found it something fairly easy to manage in the profession?
And my schooling was really challenging. I mean, I think particularly for someone dyslexic, doing 8 or 9 subjects, O levels in those days, or CSEs for some of them, for me, that was a challenge. But when it kind of honed down to like 3 subjects at A level, one subject at degree, I think the dyslexia also gives me advantages in pattern recognition.
Right.
Is one of the things I used to love dot matrix printers because I can see the patterns coming out. Okay. It's like, the problem's there. What do you mean? How do you see that? And I just do. We've got a number of actuaries, I'd say, that I've worked with that have been very high functioning, but on the scale somewhere. That's great. So I think that the profession has, it's very welcoming to that. It works. Are you good at your job?
Mm-hmm.
If you look at kind of Silicon Valley, you've got kind of one of the highest neural diversity rates in the world. And there's a reason. It's an advantage.
Yeah.
So it's an advantage in that sphere, but it needs to mix up. I never talked about my dyslexia until about 10 years ago. Yeah. Probably a bit of a missed opportunity there, I think, because it should be more welcoming. But then I think it is on the individual to make the adjustments rather than expecting the world to change.
Yeah, that's fair. Just finally, is there anything in your career that you wished you'd done or you'd still like to achieve from here?
Lots of things I wish I'd done or done differently. What I'm doing now, I've got some challenges. I can see kind of where that points to. I can see who, where the kind of where the off point for me is, who can come in next. After that, I don't know. Is what's the challenge? It's got to be something I can be curious about. The great thing about Flood Re is it's opened a whole new dimension. I've spent my entire career in the very commercial world.
Mm-hmm.
And then suddenly starting to do public policy, working with people who think about public policy in a different way, working with Whitehall, working with Westminster, they're very different ways of thinking about things. What next? I don't know. But it's got to be interesting. And it doesn't necessarily even have to be an insurance actuarial related, but one of my great colleagues retired a couple of years ago and went and bought a garden centre.
Right.
That's what he loves. Great. That's fun. But it's having that something to keep your brain very active. And that's the challenge for me.
Yeah, keep it interesting. This has been interesting. Thanks so much for joining us. Really enjoyed it. It's been great to have you on.
Thank you very much.
Well, thanks, Perry, for chatting to us about some of the challenges at Flood Re and about your impressive career journey. And do please remember to read the interview with Perry in the May-June issue or online at theactuary.com. Our next guest is actuary Georgina Bedenham. She's here in the studio also to talk about the IFOA's new climate change paper. Georgina, thanks so much for being here.
Thanks for having me. It's great to be here.
It's our pleasure. Look, you've worked for the UK government for around 13 years in the Government Actuaries Department, also known as GAD. We mostly talk to actuaries working in the private sector on this podcast. So tell us a little bit about what GAD does and what it's like for you being an actuary in the public sector rather than the private sector.
Well, so the Government Actuaries Department, or GAD as we're known, is fundamentally we're a non-ministerial government department, but we act like a shared service provider across government. So we're a bit like a consultancy within government. So we provide actuarial analysis for different government departments, local authorities, devolved administrations, and public sector bodies. Whilst obviously the name would seem like we're mainly made up of actuaries, we're actually quite a multidisciplinary team. So we have a lot of analysts working at GAD and also specialist consultants in different areas. In terms of being an actuary within the public sector, I think first and foremost it's incredibly interesting. We get to work on some of the most critical, significant financial commitments the government has, and also some of the most complex and novel challenges that government faces. So, we do a huge variety of things, and some really interesting and complex cases. So things like advising on Great Britain's National Insurance Fund, the state pension age, also looking at possibly more traditional actuarial areas like looking at property damage for schools, or the potential impact of clinical negligence claims against NHS trusts. And as well as kind of those, I suppose, existing and risks that are, I suppose, always there. We also support on current issues or crises as they evolve or come up. So, for example, we recently advised HM Treasury on the interest rates for the UK's loan to Ukraine. And also, I suppose during COVID in particular, we provided a lot of support to government across quite a wide range of areas, so different types of analysis and actuarial support. But also, I suppose one of the interesting areas was government needed to step in and support the film and TV industry when there was an insurance gap during COVID around production support. And GAD was able to support on actuarial analysis to underpin that work. So we were able to make sure that EastEnders could keep being filmed during COVID, which is quite interesting.
Yeah, and clearly extremely broad,
Yes,
the different things you work on. When the Actuary last met you, it was to interview you for the magazine back in 2023. You'd just been on secondment then to the Centre for Disaster Protection, and you've since become Head of Climate and Disaster Risk at GAD. What does your role at GAD at the moment entail? Tell us a bit about that, and I guess tell us what made you decide to become, if you don't mind the phrase, a sort of specialist in disaster, I suppose.
So my role at GAD is Head of Climate and Disaster Risk. We're a team, a multidisciplinary team, so we're made up of both specialists in climate science as well as actuarial backgrounds, and that makes it a very exciting team to be a part of and to lead. My role in particular is overseeing the team that provides advice to government departments on climate risk. And in particular, what that looks like is effectively helping government navigate the challenges of climate change. So helping different government departments identify and understand the risks that they're exposed to. That's one part of what my team does. The other part is supporting the UK government with their commitments on international development. So that includes supporting low to middle income countries with planning and preparing for disasters, primarily climate related disasters, and the different financial mechanisms that can be put in place to help with that. So that might be things like parametric insurance, for example.
You're also a member of the IFOA's Biodiversity Working Party, and you've contributed to some of the IFOA's sustainability research papers, including a new one in the Planetary Solvency series called Tipping into the Wild Unknown, which focuses on nature loss and its associated impacts. So tell us a little bit about that and the impetus around it.
Yeah, so this report is the newest in the Planetary Solvency series, as you say, and this one is primarily focused on nature risk. So for those that are familiar with the original Planetary Solvency report, we had a dashboard in there that looked across climate risk, nature risk, economic risk, and societal risk. And this paper in particular does a deeper dive on nature risk. And I think the impetus around that was, I think obviously a lot is happening in the climate space. There are a lot more conversations happening around climate risk, how we tackle it. In terms of nature risk, those kind of risks are still fundamentally missing from a lot of models. And it's incredibly important that we capture those. So this paper, I suppose, takes a deeper dive into some of the shorter term and longer term risks that we face from nature loss, and also some of the things that we're missing in terms of modelling scenarios and actuarial actuarial work that could be done just to kind of support some of the decision making around those risks.
And let's just touch on that a little bit, if that's all right. What advice do you have for actuaries in terms of sort of factoring this and emerging risks in general into their work?
Yeah, so as I say, we do cover some recommendations for actuaries in the planetary solvency report. One thing in particular to draw out is that nature risk is financial risk. So it impacts our health outcomes, it impacts markets, it impacts obviously food production, water scarcity, and all of that feeds through into economic impacts. So it's vitally important that we include nature when we think about financial modelling, and also the metrics that we use for things like economic growth and productivity. Nature's just missing from all of that at the moment, and we need to make sure that's included and really advocate for that as part of our actuarial community. The other thing that we are seeing is that a lot of the scenario analysis that's being done in the climate space is climate only scenario analysis. It's focusing just on climate change. And the thing with climate change and biodiversity loss is they are intrinsically interlinked and mutually reinforcing in terms of they're cascading risks. And the thing that we've found is that a lot of the modelling that's done so far and the scenario analysis focuses on climate only, and that can actually do harm to nature. So it's really important that integrative climate and biodiversity scenarios are used when we're doing that modelling of risk, and fundamentally also feeding into decision making. So I think that's probably a core thing to bring out as well. In terms of how actuaries approach that, I think one of the key things that has come up is around obviously trying to understand, get a handle on data as it comes, new data and metrics on biodiversity as that comes to bear. Obviously, that there has been a bit of a lacking in that sort of data metric space on biodiversity as opposed to climate, but making sure that actuaries keep up to date with any new emerging evidence and information as that comes available. But operating in that space where there isn't enough data, also I think turning to more, I suppose, potentially non-actuarial approaches of looking at qualitative methods rather than quantitative methods. So trying to look at these risks through narratives rather than numbers, because they can be equally as powerful for decision makers, rather than necessarily trying to focus too much on trying to get an exact number. It will be, we'll always struggle to come up with anything exact or predictable in this area. But I think using powerful tools like narrative scenarios is really helpful and can really help drive conversations with key stakeholders, so clients, policymakers, and senior management as well.
No, that's really interesting. You're clearly incredibly passionate about what you do. So looking back over your career to date, tell us what you love most about what you do.
So I think the thing that I suppose motivates me in my role and through my career at the Government Actuaries Department has been applying my actuarial skill set for the public good. So I think that's what really motivates me. I'm very fortunate to work in an area that I'm particularly passionate about, that really matters to me personally. I really care deeply about the sheer challenge we have facing us from climate change, and so I'm very fortunate to be able to work in that area and do something that I really care about. I also am very fortunate to work with a great team of people who are equally as passionate about these about these challenges, and come from a variety of different backgrounds. So I think I thrive when I get to work with lots of different people, particularly in, as I said earlier, sort of a multidisciplinary team, where you get to work with people from obviously actuarial backgrounds, but also from other backgrounds, so academic backgrounds or policy backgrounds. So I think that's what drives me and motivates me, and why I continue to enjoy doing what I do.
Well, that passion certainly comes through in talking to you. So thank you so much for sharing your responses with us, Georgina. It's been great having you.
Thank you.
Well, thanks, Georgina. It's been great to hear about what you do, and you've given us lots to think about, that's for sure. Our last guest today is Actuary Shivash Bagalu, dialing in to talk to us from Dubai. Shivash, thank you so much for joining us.
Good to be with you. Thanks for inviting me.
Certainly good to have you. So you're a non-life actuary and a managing partner at Lux Actuaries in the UAE. What's it like being a managing partner in an actuarial firm? How is the balance for you between technical practice and business strategy, for example?
Sometimes not very easy, especially as the business has grown. I think when we set up here in 2011, I look back at the challenges that we faced then, thinking those were significant. And as it goes on, challenges change. So balancing what at the first instance was doing the work, as opposed to now managing the staff who do a lot of it, it's a significant growth curve. So as it stands today, I do less on the technical side, as I historically have, a lot more on the business development. With respect to expansion of the business into new territories, with respect to the GCC, UAE is just one part of it, many countries to service. So changes in regulations, changes in economic climates, this takes up a lot more of the day as compared to looking at things like reserving triangles and reserving reports, which still forms part of the day-to-day work, but not as much. So these are balancing act, and they don't always get it right, to be honest.
That's an understandable balance. You've been at Lux for just under 20 years now, and were instrumental in establishing the company in the UAE. Did you have a particular approach for that? Is it the kind of work you enjoy?
Definitely the kind of work that I enjoy. I think if you don't enjoy the actual profession, if you don't enjoy what you're doing, you should step out, because you put in a lot of hard work, and if you don't feel at least that reward from or the fulfillment from what you're doing, it won't be enough. So that has been enjoyable. With respect to building it from the ground up, I think that a strategy we've always adopted, myself and the leadership of the Lux brand, has always been to source the right people, the best people on the ground, not necessarily to bring people from other parts of the world. Obviously, looking for the best people is definitely one of our priorities. But looking from within the region, growing people from a grassroots level, moving them up in terms of their career, moving them towards qualification, and that's been part of the DNA. And that's what also helped with respect to maintaining client confidence. So servicing the region from within the region, using the best talent based in the region, has been what we started with. And it started off as right at the beginning with 2 or 3 people with this vision, and now it's much larger. So I would say that has been the biggest part of our success, and we've tried not to lose focus of that. That as much as you can experience success, it's by having the right people on the team. It's not necessarily with any of the other bells and whistles that come with success. It's the people. Being a consultancy, at the end of the day, if we don't have the right people, then we're not set up properly. So we like to think that we've got that formula right.
Yeah, the profession in the Middle East has seen a lot of change in recent decades as well. It's been growing very fast. What are the main trends that you've witnessed, and what's it like to work in the profession there today?
Oh, it's exciting. I'd say over the last 10, 15, but like I say, the last 10 years, 2015, I would say still right about now. And I'll exclude obviously the recent developments in the region, but up until now, there's been such a significant growth with respect to opportunities for the actual profession as a whole, but definitely for those entering it at a student level. The level of involvement that actuaries have now across the spectrum, and not just within the mainstream insurance industries, but also within those historically called fringe areas. You've seen actuaries be grown by local universities. The level of qualified actuaries in the region now is much, much larger than when I came to the region. And are involved across the spectrum of actuarial activities, but also technical activities. So data science itself has been an opportunity for the region, as well as obviously artificial intelligence. But the actuarial involvement in that is growing, and the skill sets that actuaries bring is also being more recognized. Whereas before it would have been very hard to enter those because those were dominated by professions or skill sets that were more familiar to the market. Actuaries are carving a place for themselves in that. And I'd say that the international actuarial bodies have also recognized this and have increased their presence within the GCC region. And so their involvement, their support, the support from the regulatory bodies with respect to promoting regulation that's not just best practice, but necessarily involves actuarial involvement or necessarily requires actuarial involvement. So now, obviously, the obvious ones are things like changes in insurance supervisory regulation, like IFRS 17. That's just one element that affected not just the region, but globally, the growth of the profession. But other things like the Saudi Vision 2030, which is driving the growth of all professions, including the actuarial profession, and now involvement in things like health, life, pensions, risk management. So we do have a lot more presence in areas where we're not as well known. And the regulators now take the profession, I wouldn't say a lot more seriously because it was always serious, but we get a lot more in terms of recognition and promotion because of the skill sets we bring.
That's really, really good to hear. You've lived in Dubai for nearly 20 years, but you're originally from South Africa. So what drew you to the Middle East as opposed to staying in South Africa for your career?
I think when I came across, John, to the region, it was when I was 25 or 26 years old. Today I'm 42, and it just sounds strange to say that that's the amount of time that's passed. But at that time, when I did make the transition, it was more about getting experience from overseas markets. The GCC region at that point, for me, relatively unknown. I knew what I read. And now, having come at that point, I saw that it's not just one country. There's a lot of opportunities across many countries. And a lot of opportunities for growth. So I would say that that was the key thing that not only brought me here, but also made me stay. I also at that time wanted to grow a business, and I saw that there was potential for a consultancy such as ours to add a lot of value to the industry. And whilst at that point there may not have been as much local talent, we always tried to make sure that we were contributing to the growth of talent at an intern level, at a university level, promoting the profession so that we could be in a position to onboard that talent and grow a consultancy. At that point, I wouldn't have thought we would be what we are today. It was a very, very small dream at that point. But what has kept me here was the fact that I really did want to have this level of exposure across many markets, and also a grow profession where there was at that time so much of potential because it was very, very nascent.
Yeah, and you're founding chair of the IFOA's Middle East Strategic Members Committee. Why was that set up 2 years ago, and what's it working on currently?
That I thought was an extremely good initiative from the IFOA to set up this Strategic Middle East Member Committee. And the goal basically is to identify the opportunities for the profession that the IFOA should be taking advantage of to promote the growth of actuaries, identify opportunities to work with stakeholders in the region, regulators, universities, and other training institutions. So at that point, it was the culmination of quite a lot of involvement of the IFOA in the region already, a lot of presence with respect to conferences, but this was seen as a little bit more strategic in nature to be able to identify from a group or committee that made up members from many of the countries in the region. Maybe not all, but many of the countries where actuaries are based. And so within that committee, we try to share the views of what we see as challenges and what we see as opportunities. So I volunteered to chair that committee because I did see an opportunity to contribute more to what is happening on the ground here, but also to move the agenda of the IFOA forward. The IFOA has a lot of potential to work more closely with stakeholders in the region. And being based here and being an IFOA member, being a fellow of the IFOA, I did see a lot of opportunity for myself to contribute to that. And credit to the volunteers of that obviously made onto the committee. We had many volunteers because they do contribute towards bringing perspectives from what is happening on the ground and how we can take advantage of it or how we can meet them in terms of the ones that are challenges in a practical way. So it's using the people that are based here, members of the IFOA, to contribute to the solutions that the IFOA will push forward, as opposed to bringing solutions that work from outside and transplanting it here. Because it's an ever-changing market. The challenges are changing, and the people are changing. So the people on the ground will be in the best position to be able to suggest the best solutions and work together towards making sure that they actually happen.
Yeah, thanks for that fascinating look at the state of your, the actuarial profession there in the Middle East and the growth of your organization. Before we go, tell us something about the non-actuary side to you. What's important to you outside of work, Shivash?
Well, I think one of the things I enjoy, particularly based in the GCC region, in the UAE in particular, is travel. There is an amazing opportunity to see so many parts of the world from where you're based here. And within a commercial environment, I mean, within a business environment, if I can say, the ability to travel and see our colleagues and stakeholders in different countries, which are still locally based, I would say within a 3 to 4 hour radius from where we are, the exposure opportunities that we have are very significant. So I enjoy the travel. I enjoy spending time seeing how many of these countries that I visited over the years have changed, meeting our colleagues there, former colleagues, new colleagues. That is what I enjoy a lot. I mean, one of the things that I really try to do is contribute as much to the growth of not just the company, but of the people themselves. So when I meet them and through this travel that I like to perform regularly, it's something I look forward to.
Oh, that's great. And thank you so much for sharing all of that with us, Shivash. It's been great having you on.
No worries. Thanks very much, Shah.
So as ever, a huge thank you to all our guests this episode. We hope that you enjoyed listening, and do please spread the word and subscribe also on YouTube. And please do join us again next time. We look forward to seeing you then.